Hi everyone, it's Thursday morning around 8:50. This is your pre-opening comment for today, and it's video number 301. If you appreciate and like the work, please hit the subscribe button. There's a lot of information out this morning, the biggest of which is jobless claims every Thursday. The initial claims were down slightly at 1.48 million, down from last week's 1.54. And while that's down, it's not as good as expected. They were expecting only 1.35. Continuing claims were just under 20 million from just over 20 million. The actual number is 19,522,000. So some people are getting back to work, but there are still plenty getting laid off. Almost 1.5 million is substantially more than the decline in continuing claims. We also had business inventory slightly down. Durable goods orders, however, were 15.8 versus 9.8, so that's a good number. And ex-defense, it's still 15.5, so that's somewhat encouraging. Business investment was slightly higher, not overwhelming, and the third look at GDP shows down 5. That's unchanged from the prior look. We also this afternoon have the results of the bank's stress tests at 4:30. This will affect dividend plans. I don't think anybody is buying back stock in that sector. And while the big banks are doing better, the small business fails affect the smaller banks and the regionals. So I'd be concerned about that. I know you're getting tired of hearing it, but COVID-19 is still the big influence here. All of the hotspots and numbers coming in are well in excess of the prior all-time highs from back in March. Asia and Australia are both lower this morning. Europe is lower this morning. And to sit and see the tape, every airline, every cruise, they're all continuing lower. Boeing is down another $8 or so. The bonds on maybe a little flight to safety are up 0.5%. And as you can see by the chart here, the oil is down about 80 cents. This still isn't crucial, but I would still like to see it hold in where all these closes are, right around 36.50. I'd like to see it hold right where it is, and certainly it needs to hold above this moving average, which comes in right around $36, and that's the 20-day. Pardon me, that's the 100-day. We're slightly below the 20-day, and we broke down through the 5-day yesterday. The gold is down a little also. Also not an overwhelming concern. As I said yesterday, I expected a little bit of a pullback. In fact, I might add back into the Newmont calls that we sold at 294 at the 100% up rule. As you can see, this is a pretty minor pullback from a new recovery high here at 1796. Right now we are trading down 580 at 1769 and change. I'm still keying off these closes in the area of about 1765. And the low today so far is 64.10. So as long as we can get back up and close above that, that would be terrific. That's about it. By the way, I just want to make mention, it shows on the futures pretty substantial losses. What I want to point out is the way I pointed it out earlier this week when the futures were up but the fair value took them much lower. Today, the S&P looks like it's down 24 and a half, but fair value brings it all the way to about 12. NASDAQ down 24 and a half also brings it back to about down 17. Which is really nothing overwhelming. And the Dow, which shows right now down 259, actually has an implied open of down only 130 because the fair value there, I believe, is 128. So these things are not as bad as they look. I'll be back later in the day, and don't forget to subscribe.